This is Eric Mwathe for the week of February 1st, 2014. Let's take a look at how markets ended on Friday. You see on Friday, Dow down about 150 or close to 0.97 lower. Nasdaq down about half a percentage point, and the S&P 500 down 11.6 at or 0.65. That's how the market looked like, and you can see the VIX had a nice up day. The euro was down, and so was crude oil, and so was gold. So most of the markets were down for the day. And if we take a look at what happened for the week, we see that for the week the Nasdaq was down 0.59%, which is actually interesting. You'd think it would be much lower for the week. We see that the S&P 500 for the week was also down 0.43%, and the Dow for the week was down the most, down 1.14%. Now this is important for us to understand. Why was the Dow down the most? I think that's a good question, right? Why was the Dow down 1.1% while we see that the S&P 500 was only down 0.43% and the Nasdaq was only down 0.59%? So why the small numbers on the two markets but a bigger number on the Dow? Here's what I think, and this has always been my theory, and this is what I always look for, is whenever you see a market move below 50, you're going to get a big push. This has nothing to do with the news, has everything to do with the mathematics of how the RSI is calculated. I know a little bit makes no sense, but for this number to move from above 50 to below 50, you have to introduce a big number into the mix. You have to introduce a big number so that this can slash below 50. That's how the RSI works. That's why for the week the market was down the most. And you can see that the S&P 500 did not come close to 50, so there was no big number introduced to the mix. We see that the Nasdaq was also not close to 50, so there was no big number introduced to the mix. Now let's take a look at how markets are looking from a monthly perspective, which is also for the year. We see that for the year the Nasdaq is down 0.174%, and again you're going to notice something interesting here. So the Nasdaq is holding above 69.10, hence it's not down that much. Let's take a look at S&P 500 on the monthly chart and for the year. For the month and for the year, the S&P 500 is down almost 4% or 3.5% there, and you can see it has not cracked below 69.10. This is important to understand because this opens the possibility in the month of February or at some point for it to move below 69.10 on the monthly, and any move below 69.10 here is a definite big number going to be introduced, which is going to be lower. Remember, as we cracked above 69.10 here, you can see what happened. We had this nice move. We recaptured 69.10 here in August, September of last year, which is this time period here. We had this big move. All this is mathematics, has nothing to do with most of the factors we consider. Take a look at the Dow on a monthly level and also from for the return for the year. The Dow is down the most. Again, why? Because it's moving below 69.10 or because it moved below 69.10 in the month of January, so it's down the most. And that's just how the math works. Okay, those levels are important to always understand how markets behave around these levels on the RSI. 50.0 here, 50 or 69.10. If you understand how this works, and a lot of things that happen in the market make a lot of sense. And you'll find my videos on YouTube talking about these levels and how you can use them to your advantage. Now let's take a look at the charts here with the annotations. Begin by taking a look at the weekly chart for the Nasdaq, and you can see we are almost at a point of decision making here. This line is going to be either support or break. You can see we've been finding support on this line. We did here, which was somewhere around here for a nice entry. We did here again, which was this level here, which was a nice low. We touched that line again here, which was this low here. and we recaptured back above this line here, which was the beginning or the last week of beginning of January 2013. So that level has held. As you can see right now, we are either going to bounce off that line again for a nice move, or we, for the first time in a couple of months, if not going back to beginning of 2013, we are going to crack below that. So the market is going to tell us in the coming week or so whether this is going to be support or break. Take a look at the daily. And the daily is also at a very interesting point. Those of you who are subscribers know that we've been talking about this, or I have been talking about this level here. This level here has been very, very generous to the market. Generous in the sense that it's been support on the way up during this nice move since 2013, this breakout here. Since this breakout, we've been finding support on every low on the daily at this level. Now, I know I've talked about this, so I'm just going to go through this very quickly. Every low here has been coming at this level here on the daily RSI. If you use this for entry last year, you had nice moves in the market. And you can see that we are back in this general area. Let me take that off. So that line actually is somewhere around here. And you can see we found support here. As long as the market is holding above that level, this market is going to bounce. Take note of now the fact that we are on this line here. Once we broke out here, we had a nice run, tested that line, tested it again, went higher, came back, tested it, went all the way to 13-year highs, came back here. We seem to be finding support here and want to move higher. Also happens to be an area where we have this previous high, this breakout level. Let me take that off so I can explain that. Now remember, this is true for most of the markets that you're watching. This level here has been, this was a previous entry point on the way up on the most recent breakout. And you see we broke out. Oops, we broke out here, coming back, testing that line, which also happens to be at the 50-day moving average. So lots of things going on here. You got one line coming from this, which could be support. You got support coming from this lateral line here, and you got also support coming from the 50-day moving average. So right here, lots of things. We can very easily bounce, and we can have enough reason for that. Or guess what? This market could decide to surprise us with a nice move. But I think as long as this level is holding here on the daily, it's safe to say the market could conceivably move high in the coming days or so. We'll see what happens. The one thing I can say is that on the daily RSI, there's a slight chance the market could slip here and trade below zero on the MACDs. These two MACDs here, if it slips and goes below zero, momentum is going to flip to the downside. Now let's take a look at the Dow weekly. And you can see again the Dow weekly also happened to have broken this line that I have had on my charts for a couple of months, if not throughout 2013. This line has been very nice on the way up. Every time you found support, like you found support here, was a nice entry on the Dow. Touch that level there, which was a nice entry on the Dow. You touch that level there, which was this nice entry. You touched it again here, which was this nice entry there. Very nice entry points, and you can see for the first time we've broken below that line. So it remains to be seen. We've broken below that line for the first time. Now I can also draw this line different, which is connecting the current lows, and you see that the market is trading very close to that level. The one thing that I've been thinking about is there's a possibility that next week or the next week or so, the Dow has a chance of snapping back this recent lower move and moving above 50. If it moves above 50, you're going to get a big push to the upside. You can see here, it moved above 50 here, which was this sharp move here. So watch out if the Dow moves back above 50 on the weekly time frame. Now you'll see that on the weekly price, this was a level where the market broke out right here. Nice entry point on the way up. Nice weekly breakout. So extend that line and you can see that the market is trying to find support there, which also happens to be where you have an upward trending 33-week moving average. So you have support coming from multiple levels, possibly here, possibly from the 33-week moving average, and also possibly from these lows here. And these lows connect on the RSI here, this low here, and this low here. So you can draw this on your charts and you'll see it makes sense. The market is trading close to that level. We'll see what is going to happen when the market gets to decide here in the coming week. Take a look at the Dow from let's take a look at a daily for the Dow just to see. Now the daily is almost similar to the Nasdaq, so I'm not going to keep rehashing all these points. You can see, take a look at this support line that could be support. Taking the lows on a daily closing basis, you see we hit that low intraday, seem to be holding. Also happens to be a test of this previous breakpoint there, which is where we are trading right now. And also you can see that the previous entry point on the daily on the Dow comes to somewhere around this level here, which is this. And so you see we've been bouncing off this level. We bounced off it here, which was this entry point, bounced off it here, which was this entry point here, and you can see we are trading here. So if this continues holding, then the market could have a chance of moving to the upside. Let's take a look at the Dow from an hourly chart, because you see some information here, and you can see from an hourly basis, if you take back this low here and this low, this highs, draw a straight line. So here the market, this was an entry point to the way up, entry point, test of that breakout, we came back, tested it and took off. We'll come back and test that general area again and succeed, and we went higher. We've worked our way all the way back here. So this is, as of right now, holding on the hourly chart. We'll see whether it continues holding for a bounce or if it cracks. If it cracks, that's not gonna be good. On the hourly, the RSI also shows that there's top line resistance. On the hourly, you can see if I draw that line there, it connects the highs. Connects the highs there, connects the highs there, and it connects the most recent highs, Friday's highs, which makes sense why the market pulled back towards the close, because there was resistance on an hourly basis there. Now let's take a look at the transports, and we're going to take a look at the transports from a daily chart, I believe. Yes, daily. So take a look at the transports daily. Lots of things here. Same development. There's support that could come from that line there, which has been support. And I can go about this and repeat myself a million times, but it's just this line has been very kind to the Dow transports, going back to these lows here. Ever since we made lows here, this has been support. Very nice entry point. Support here, which is here. Support here, which is here. Support here, which is here. And now recently close to that level, which was here. And you see we seem to be holding there. So without complicating issues, this seems like where this thing could bounce unless it breaks, right? And also take note of this level here. This level here was the entry point on the way up, is now seems like support. Also seems like this is where the 50-day moving average is trading. So lots of reasons to suspect the market wants to bounce. We'll see what happens. Now all this is going to change if we open Monday or Tuesday or whenever and we crack below these support lines. As long as we are bouncing off the 50, the market is looking like it wants to bounce, surprisingly as that might sound, because it is actually looking like that. If you take a look at the S&P 500 and take a look at the daily, and lots of things going on here. Take a look at the top lines there. So ever since we broke out above this was resistance on the way up, resistance here, and once we broke out here, we bounced off this line once here, again here, and again here. So either we are going to hold for a bounce, or for the first time we are going to crack below that line. That's one way to take a look at it. Don't forget that we broke below this previous buy point here. So this one has already broken down. Support failed. So this breakout here has failed. And remember, failed breakouts are notorious for moving markets lower. Remember again, the reason why we are trading lower, for those of you who have not been following me, is we made higher highs here in price on the daily and lower technicals. Once you saw that, you knew that this was going to be scary, because you made a higher high in price here, but the technicals did not move above 61.8 on the daily. The technicals failed to move above 61.8 on the daily, and that's usually your biggest sell signal when the market is making new highs. So the pullback is not surprising. Take a look at the S&P 500 weekly. And what I want to show you here is we are back at possible support level here. Oops, let me draw that again. So the S&P 500 is back at possible support based on these lows here. This line has been holding the S&P 500 together. The last time it bounced off this line was here, which was this nice entry point, very nice entry point. And so we are trading precisely on the line. We are either gonna bounce, and if we bounce, my thinking is we are gonna take out these highs, or we are gonna break below that line. So since I'm not the one who tells the market what to do, we have to wait for the trading data to come in next week on the new week to see whether the market is going to bounce off that line or not. Now, I want to take a look at the Qqq Daily. Actually, before I do that, take a look at the S&P 500 hourly chart, because there's some information there. Gives you a nice feel for what was going on the hourly. You can see on the hourly, there's resistance on the hourly top lines. The market tried to bounce late in the trading session but failed there, so we closed weak. Also, RSI top lines, and these things are very important because they always tell you what's happening. These highs, once we hit that, the double top coming into the last hour of Friday's trading, that was always going to be reversal. That makes sense why we pulled and headed lower towards the close. So of course you have to be careful here if you are short, because if you open the week and the market, if you open the new week and the market happens to break out above that line there on the hourly, if it breaks out, then that's going to suggest that the market wants to move higher. So we have to watch that. Also watch if it breaks out above this hourly closing high of about 1798 is this hourly closing high. Anything moving above that is going to confirm that the RSI has broken out to the upside. And also if the price is moving above that level, that confirms that now the market could seriously be looking to move higher. Don't forget that this has held this line here that I'm drawing here. This line is important because this was entry point on the way up, was support here, has been support over the last couple of days here. So it's holding. As long as it's holding, it's good. If it cracks, lo and behold, the market could conceivably have a very big move lower. A quick look at the Qqq Daily. What I want to point out here on the Qqq Daily is just my thinking here and it's just my idea. I think something is changing here. If you draw a straight line from the lows, this line here, you'll see that for the first time, what was support? It was support here. This little support here was this low, was support here, which was this low. All right. For the first time, we've broken that line. This could suggest something is changing in the market. Of course, it's too early to tell, but that could suggest that if we continue making lower lows on the RSI, on the daily, on the Qqq, and also let's keep it simple. If we break below the 50 on the 50-day moving average, anything below the 50-day moving average. Okay, so let's move on to the next thing, which is the VIX. I want to take a look at the VIX daily. And the VIX daily is, I said during the week, if VIX holds above 18.14, which is this daily closing high right there from earlier in the week, if it can hold above that, then the VIX has a chance to move higher. Okay, just keeping it simple. If it can hold above 18.14, it has a good chance to move higher. If it moves back below 18.14 on the daily for the VIX, it's going to suggest that the RSI has moved back below this area. And this is, to me, going to look like a double top on the RSI. Remember, this has been where the VIX has been stalling, this general area. So if we move back below this general area on the VIX, that's bearish for the VIX, bullish for the market. Anything above this price level of 18.14 on the VIX is bullish for the VIX, bearish for the general market. Let's take a look at stock I always mention to you guys on the free side of this video. Remember, the video continues on after this for subscribers. But let's go to the weekly for the Apple here, and I just want to bring you back to the chart that I talked about many weeks ago. Remember, many weeks ago I told you this line was going to be problematic for this stock. Why? Because this line told you when to get out here, which was this high there, and we came back and hit this line once, and we came and hit it, went above it, and had uniform action above the line and back below it. So this was always going to be a trap. That trap has come into fruition. It now makes sense that what I was talking about made sense. If you take a look at the weekly from the lows of 09, draw a straight line, and you can see this was support on the way up. Was support here, support here, support here. Once we broke down, came all the way, back tested there, and failing. So it all makes sense. That's what I was talking about back about three months ago. I thought that was going to be resistance. If you take a look at the monthly, same scenario here. I talked about the back test would probably fail. This is a monthly chart for Apple, and you can see on the way up we bounce above the line. Oops. But once we broke down below that line, which is, let me draw the line again. Once we broke down here, we came all the way back. That became resistance, and now we are coiling back. It all makes sense as far as I'm concerned. Let me show you another chart that I showed you last week before the stock fell this past week here on the weekend video, and this is a monthly. I want to show you a long-term monthly again. And last week I told you that more than likely we get reversal here because this level here has been problematic for the stock. It was problematic for the stock in 2000, which was here during the tech bubble bust. It was problematic here in 08, which was before this big drop, and I suspected it would be problematic in the here and now. Eric Moade. This is going to conclude the free part of the video for subscribers. The rest of the videos continues on.